There are two categories of billionaires: those who created their wealth through their efforts, and those who inherited it from family trusts. Ray Dalio belongs to the former group. And while there are numerous stories of individuals who started with nothing and achieved great success, few are as fascinating as Ray Dalio's. In this video, we will dive into Ray Dalio's story, explore the principles and strategies that guided him on his path to success, while focusing on his relentless work ethic and commitment to transparency. We will uncover the key factors that have made him one of the most successful investors of our time. Whether you're an aspiring investor or simply curious about the mindset of a billionaire, this video will offer valuable lessons and inspiration. So sit back and let's explore the life of Ray Dalio from zero to the biggest fund in the world. Who is Ray Dalio? Ray Dalio was born on August 8, 1949 in Jackson Heights, New York City. But he grew up in Manhasset, a suburban community on Long Island. Dalio was an only child. His father was a jazz musician and his mother was a homemaker. Dalio started earning from a young age. He was a caddy at the Links Golf Club, shoveling snow from their driveways, mowing his neighbors' lawns, and holding a paper route. Although young Dalio was not fond of the school routine, he passed high enough to be accepted into CW Post College, earning a BS in finance in 1971. Although he was not interested in academics during high school, he excelled in finance in college. This newfound interest in finance led him to pursue an MBA at Harvard Business School, which he completed in 1973. Career beginnings. Ray Dalio developed an early interest in the stock market during the 1960s. Using his $300 savings, he bought Northeast Airlines shares and quickly tripled his investment when the company became the object of a merger effort. This experience sparked his passion for investing, and he began reading annual reports and talking to older investors to learn more. He also learned the importance of careful research and the value of seeking feedback from others. While studying at CW Post College, Dalio became passionate about commodity futures. Due to their low margin requirements, he took the opportunity and earned a significant profit with a minimal investment. He continued to buy and sell stocks all through college. His stock portfolio was worth several $1,000s by the time he graduated. His early experiences taught him the following principles: careful research, seeking feedback, and being right when others are wrong. These experiences laid the foundation for Dalio's career in finance. He would continue to apply them throughout his investing career. In the summer of 1971, Ray Dalio was a clerk on the New York Stock Exchange floor. Here, he witnessed the first-hand effects of President Nixon's verdict to sever the relationship between the US dollar and the value of gold, ending the Bretton Woods Agreement. This was the first lesson on investments, the importance of currency exchange rates, and he set out to master the subject. Professional career. After completing his studies at Harvard Business School, Ray Dalio spent his summer trading commodities at Merrill Lynch. This experience helped him understand the intricacies of commodities trading, which later became a lucrative venture. When he returned to school, the commodities market exploded. And with some Harvard friends, Dalio started Bridgewater Associates, a small company to trade in commodities. However, their first venture was unsuccessful. Later, when commodity prices skyrocketed, inflation rose, and the stock market plummeted, investors flocked to commodities. With his expertise in commodities trading, Dalio was in high demand, and his reputation grew on Wall Street. Dalio joined Dominic & Dominic LLC, then became a Shearson Hayden Stone trader for a year. It wasn't long before Dalio clashed with his department head and then got fired. But despite this incident, several trading clients still trusted him. He left Shearson to work independently for his remaining clients. In 1974, 26-year-old Ray Dalio relaunched Bridgewater Associates and started working out of his 2-bedroom apartment. His newfound independence in business overlapped with his newfound stability in his personal life. He met and got married to Barbara Gabaldani. Before we continue, make sure to hit the subscribe button and turn on the notification bell so you never miss out on our latest videos about the world of finance. Now, back to the video. launching Bridgewater Associates.
And I want to get there through radical truthfulness and radical transparency. So what I mean is that I want a system in which the best ideas win out. And I want to get there through radical truthfulness. In other words, people say what they honestly mean.
Initially, Dalio intended to trade commodities overseas, but eventually he solidified the company's position in consultancy. His belief in cause and effect relationships allowed him to predict all aspects of a business, including the time and quantity of goods coming to market through regressions of weather forecasts and yield. His analytical approach led to early successes of Bridgewater. However, there were still some challenges along the way. In 1982, a poor investment decision wiped out Dalio financially, and the firm hit rock bottom. He had to borrow $4,000 from his dad to rebuild the company. But despite this setback, Bridgewater continued to grow and gain recognition. Dalio's prediction of a depression in 1982 was publicized, further cementing Bridgewater's reputation as a leader in the industry. Ray and Barbara Dalio relocated to Connecticut in 1981 to start their family. They also brought Bridgewater offices with them. The firm initially focused on advising corporate clients looking for currency exchange and interest rate risk services. As Bridgewater's reputation grew, it began to attract larger clients. McDonald's and one of their major suppliers were among the first clients to sign on. Later, they would sign World Bank's Employee Retirement Fund in 1985 and Kodak's retirement system in 1989. Under Dalio's leadership, Bridgewater embraced radical transparency, a management style he coined. The approach encourages constructive criticism and analysis of colleagues' mistakes, as long as they are part of the learning process. Vices like gossip, secrecy, and behind-the-bank criticism were forbidden. Company meetings were to be recorded and made accessible to the entire organization. Ray Dalio's investment and management principles.
Though the economy might seem complex, it works in a simple, mechanical way. It's made up of a few simple parts and a lot of simple transactions that are repeated over and over again a zillion times. These transactions are above all else driven by human nature, and they create three main forces that drive the economy.
Then you will have a design that will work. And then if you take that design, so many people form designs, but they don't follow through and don't do it.
So we are in debt a lot. You can't change that. We got a lot of debt.
Classic movement, of course, as rates go up and money becomes tight, you lose the parts of the economy, the parts of the market that are the bubble parts that needed the cash flow, right? So you see the tech stocks come down, all of that come down. You see private equity, you see venture capital because they needed cash. All of that comes down. I want an idea meritocracy, which means the best idea to win out. I want meaningful work and meaningful relationships. I think that makes people rewarded, and it's most valuable when you're in a mission together and you're challenging each other and so on, but you're in it together. That's a very powerful force. And I want to do that through radical truthfulness. Don't let any barriers stand in the way of getting at that truthfulness, and radical transparency. So anyway, the sentence is meaningful work and meaningful relationships.
Dalio's investment principles can be collapsed into 5 themes. 1. The economy drives investment opportunities and risks. 2. Inflation poses serious threats to investors. 3. Investors can manage risk by combining uncorrelated assets. 4. Investors should take profits on fully priced stocks. 5. Bias is a major contributor to investor losses. However, his advice to other investors through his book Principles, which emphasizes the importance of number 1, having a well-diversified investment portfolio, and number 2, understanding your decision-making principles. He refers to this set of rules as a recipe, which can help you achieve your financial goals and see you through turbulent economic storms. Ray Dalio's investment principles are the cornerstone of Bridgewater Associates' success. These principles are based on evidence and incorporated into algorithms. They are back-tested, enhanced by human insights, and then programmed into decision-making systems. The objective is to determine the best investment assets to invest in. Dalio believes it is critical to consistently learn from life's lessons and adapt to new realities to enhance one's capacity to manage reality. He also believes that the world, including the markets, works like a machine, and that even the most complex realities result from cause and effect relationships. In 2006, Dalio helped Bridgewater analysts predict that the US economy was headed towards a major deleveraging. He made strategic investments in US Treasury bonds, gold, and the Japanese yen. In 2008, his prediction came to pass. Bridgewater's culture is founded on idea meritocracy, where the best ideas win, regardless of where they come from in the employee hierarchy. Although Dalio believes in the concepts of failing fast and failing forward, he also adheres to the principle that one should not presume to know how to achieve success in a particular task unless they have accomplished it successfully at least 3 times. He believes that learning through trial and error, getting the best advice from other people, and writing down principles are key to success. Ray Dalio believes success results from collectively adopting concrete principles. Retirement.
Now, Ray Dalio is now ceding title and voting rights to steal Bridgewater's succession plan. Bloomberg's Eric Schatzker joins us now on set to break it down for us.
In 2017, Ray Dalio stepped down as CEO of Bridgewater, and in 2020, transitioned into Chief Investment Officer to mentor the company's investment committee. In 2021, Ray Dalio stepped down as chairman of the biggest fund in the world. In addition to his work at Bridgewater, Dalio is a philanthropist who actively supports various causes. He is particularly interested in ocean exploration and addressed inequality in accessing finance, healthcare, and education. Bridgewater Associates managed over $235 billion in assets when he stepped down. And there you have it, folks, Ray Dalio's journey from zero to founding the biggest fund in the world. As it turns out, Ray Dalio built Bridgewater Associates through radical transparency and idea meritocracy. What do you think of Ray Dalio's fascinating story? Do you believe in his investment philosophy? Share your thoughts in the comments below, and don't forget to like, share, and subscribe for more fascinating insights into finance.